I am doing this video from Costa Rica this week. I got here on late Thursday night. And so far, it's been pretty good. It rained for about an hour one night, and that's about it. And this is the rainy season. And I really haven't seen any rain, so fingers crossed that this continues on. As far as my microphone, I do have an adapter for my external microphone this time, so I don't have to rely on the laptop speaker. Some complaints last week that the volume was too low. Believe me, I keep opening up settings and I keep pushing that microphone volume up, and Apple every now and then just says, oh, you don't mean that. I mean, we think you mean this, and it keeps resetting it on me. And every time I got to record something, I have to remember, open it up, have a look. Yep, it reset it lower, so I got to reset it higher. I don't like this business of the operating system making decisions on my part, thinking that I don't know what I'm doing. When I keep doing it again and again and again, you'd think with its AI it would go, you know what? Speaking of AI, let's talk about ChatGPT 5 later in this episode. Let's start with some economic data. Last week wasn't interesting, and overall, it really wasn't an interesting week. You had earnings that were pretty good, kind of okay, and not so good, sort of a mixed bag. The market would start strong every morning and just sort of sell off through the day, except Friday. Decided to print all-time highs on at least the NASDAQ. Thank you for Apple on that. And Google. Google got a number of upgrades during the week, so we'll take a look at that and see where it could possibly go. Let's start with our trade balance because, well, you have these tariffs. We got to get rid of the trade balance. That's a big deal, right? Or the trade deficit. Got to get rid of that. Negative 60 billion. The month before was negative 71, so you might be inclined to think, aha, it's working. But if you go back to August and September of 23, in the last 3 years, there have been instances where the trade deficit was lower. Both August and September came in under 60 billion at about 59.5, so that we're seeing a 60 billion it's not unheard of in the last 3 years. So we'd have to start seeing 50 billion and 40 billion for a conclusion to say, something's going on here. So as far as the balance of trade, I would say nothing much to see here. It's well within normal ranges for the last 3 years. Let's head to ISM services. And I guess we don't care about this anymore based on the price action last week. Expectation was for 51.5, came in at 50.1. The services, I mean, manufacturing, who cares? We haven't been looking at ISM manufacturing for a while. It hasn't moved anything, but services, that's the big part of the economy. 50.1, threatening to enter into contraction territory. Business activity 52.6, the month before 54.2, so that was a drop. ISM services employment, this is for the month of July, 46.4. The month before was 47.2 for June. In fact, if you look at March, April, and June, they were all in contraction. May popped up above 50 slightly, and then June 47.2, July 46.4, going in the wrong direction. This does back up the employment data, however. New orders also dropping 51.3 to 50.3. The only thing going up are the prices paid index, 69.9. Last month was 67.5. So if we look at March, it was 60.9, April 65.1, May 68.7. Now we're 69.9. It's just been going pretty much straight up. Now I don't know if when they're looking at prices paid, if it's the expectation that just keeps increasing, the tariffs, things are gonna go up, or if they're going up because the CPI isn't really showing that. PCE isn't really showing it, not to this extent. Going from a 60 to a 69, that's a 15% increase in expectations, and not really seeing that. Non-farm productivity, got that the next day, 2.4. So unit labor costs 1.6. What this is saying is that even if your labor costs are going up like 4%, if they're also putting out 4% more, your unit labor costs have not increased at all. Based on the output that you're getting, your cost per output has not increased if your productivity is rising at the same level as your costs are. So when we see unit or labor costs going up, we can attribute some of that to productivity. The rest would be our unit labor cost. 2.4, leaving unit labor costs at 1.6. That is the true price pressure on the output, is 1.6%. Because if I'm paying you $100 and I'm getting 100 output, and I pay you 105 and I'm getting 105 output, it's still only $1 per output. My cost per output has not gone up, right? So there should be no price pressure on my selling price because my unit cost is still the same. 2.4, is that impressive? Last year, Q2 of 2024 was 2.1, and the year before was 3.4. So if you go back to 2023, you had better productivity. Unit labor cost, Q2 of 2024 was better. It came in at negative 0.9. We're at 1.6, and then Q2 of 23 was 3.1, but inflation was so much higher. Wage inflation was 6-7%. Unemployment was printing a 3 handle, 3.6% on unemployment. We're 4.2 now. Speaking of unemployment, let's travel to Canada. Unemployment rate stayed steady, 6.9. Expectation was for 7, so that was good news, but nothing else was. Employment change, loss of 40,000 jobs. So how can unemployment stay the same when you lose 40,000 jobs? Look at participation rate, 65.4 down to 65.2. So yes, you lost jobs, but a lot of people left the labor force at the same time, making the unemployment rate the same. Had they not left, you'd probably be at 7. And how the jobs were lost were not good either. Full-time, negative 51, part-time, plus 10. You kind of want to see it the other way around, that more part-time jobs were lost than full-time, but nope. And average hourly wages, 3.2, so 3.5. This is consistent with stable inflation pricing. Labor costs usually run higher than the level of inflation, only because you have productivity, right? So you can run your labor costs higher than the rate of inflation without pushing up inflation if you have productivity. The U.S. is known for having a much higher productivity rate than Canada. Canada has had this productivity problem for like 40, 50 years. Papers have been written about this, is how come Canada hasn't got the same level of productivity as the U.S. So wage inflation in Canada has a higher probability of bleeding through to inflation than it does in the U.S. because of the difference in productivity. Okay, rates and yields, all fairly well behaved. Rates not doing much. Yields higher across the curve. TLT negative 0.6 week over week. SPX had a great week, up 2.43, and DXY down 0.88. For the meeting in September, 38 days away, but look at this, you're pretty much running a 90% probability of a rate cut. 10%, 10.9 on nothing happening. And there is a new Fed governor. And it's Stephen Mirren. As far as the field of economics goes, the only good thing that you can say about Stephen Mirren is at least it's not Peter Navarro. I mean, if you had to find two seemingly educated but obviously unqualified people in the field of economics, I don't know that Trump could have done better by picking Navarro and Stephen Mirren. To have them together in one place, it must just be a big black hole of intelligence where if they're in the same room together, there's this big sucking sound of intelligence just being sucked into this black hole. Anyways, he's a temporary governor, and I wonder if there's a poly market bet out there of how many rate cuts he's going to advocate for. I bet you he wants to push for something like 3 or 4 at this meeting. He'll be the one that decides, let's go 3, let's go 4, let's go 5. He doesn't understand much, unfortunately. This week we get U.S. CPI and U.S. PPI. We get one on Tuesday, and give us time to digest it. On Thursday, we get PPI, retail sales in 5 days. See how the health of the consumer is doing from the first quarter. Second quarter GDP, specifically, the consumer appears to be weak. Let's see what's going on. You do have some Fed speak this week. We'll hear from the ones who did not abstain of why they voted in favor of doing absolutely nothing. Reverse repo still under 100 billion, sitting at 80. I'd like to see it get to zero just to see what the reaction would be, but it's been holding above that for some time. With the Treasury favoring shorter-term issuance, there will be more money market securities. There will probably be less need for the reverse repo. Reserves 3.33. By the way, once this hits zero, these start to drain rather quickly. The TGA 464, Besant's goal is 850 billion on the TGA. Where are we? What do we have here? We have slope. This is nothing much on the 2 to the 10, same with Canada. The 3 month to the 10 year, the money market to capital market, is still inverted. This should be green and these should be red. My spreadsheet's not picking it up. I don't know why. Let's look at Fed funds futures, Q3. And there's only one meeting in Q3, that's September. It is basically pricing in a rate cut there. Q4, 1.5. Market's sort of torn. You have 2 meetings. Is it 2 goes or is it 1? It looks like it's 1 for sure. That would be the 50 basis points that the committee had already sort of telegraphed earlier in the year, the expectation that there'd be 2 cuts by the end of the year. And by the way, in September, we also get the SEP. I bet you there'll be 1 dot. really, really down there, like 2% by the end of the year. Any guess as to who that would be? 60 basis points by the end of the year. Q1, another cut, it looks like there. Q2, another one. So 100 basis points over the next 4 quarters. And if we go out to October 26th, really the only one I'm looking at right now, it's at 3.16 on the implied rate. That's 117 basis points down from where we are now, or 4.5 cuts in 9 meetings. I seem to think it's going to be more than that. Once you get into May, you can probably expect, if you only had 2 or 3 cuts by May, you could probably expect rapid cuts. I think Trump will do everything he can to shape the FOMC towards his will. So I think if I see this get to, it's 96.84 now, I'm going to start buying at 96.80. And I'm going to buy it in sort of an incremental approach. I'll probably start with 2, and then every 2 points down, I'll go to 4. And if it goes to 76, I'll go to 6. If it goes to 74, I'll add another 8. If it goes to 70, I'll add another 10, and I'll just keep adding on the way down in that sort of staircase manner, because I think you could probably see up to 200 basis points of cuts by October, and it's only pricing in 117 now, so it seems to me like an easy way to make money on that one. I've done fairly well on the Fed funds futures by taking positions that I think either way too many cuts priced in, which was what we had at the beginning of last year, way too many cuts priced in, to not enough cuts priced in. And you are heading into a significant regime change. You're going to have 3 on the FOMC committee now that are on Trump's side. Who knows who else will flip on the inside, just to avoid the name calling. Nobody wants a name. And how many other people might decide, you know what, I don't want to be involved in this, and also resign. So if I had to pick the long end of the curve or the short end of the curve as the more sure thing, it's the short end of the curve. The long end of the curve, I just got question marks on right now. I can see if this is coming down, you're gonna get a bull steepener. But that could also mean that the longer end of the curve is lower. So let me just show you what a bull steepener looks like. We'll just erase some of this that's on the screen. We don't need that anymore. And let's take the shape of the curve right now, which looks like this, right? I'm just replacing this. So if you bring the short end of the curve down, if you take, let's say, the 2-year here to the 10-year, there's the steepness, is you could get a 2-year here and a 10-year here, so that the curve really steepens. That all the way along, yields have dropped, which is bullish because yields down, prices up. Yields have dropped, but the curve is steepened. So I think if we had to bet on two things, I would bet on ZQ. I would be long ZQ futures a year out. Going out to October, I think, is a nice safe bet at 117 basis points. I would seem to think a base case, a conservative base case, would be 4.5 cuts in 9 meetings, which means I don't think I can lose even if I bought here. But I think it's going to be much higher than that. The other thing I would bet on is the steepener. From the 2 to the 10, for it to steepen much more than this as rates are going down, because I'm not sure the market is going to play along on the long end until the Fed decides that, you know what, we need to engineer lower rates on the long end, which is a sort of Besant's ideas to get that 10-year down significantly. The Fed has the tools to do it. $2.2 trillion in mortgage-backed securities that they do not want on their books. They have the tools to do it, but until they announce that that's what they're doing, I would bet on, like I say, long ZQ, bet on a curve steepener, and the jury's still out about TLT, the long end of the curve. Real rates continue to come down. The 10-year, 1.88, well below 2%. The 20 and the 30 still sitting above 2. These should be green. I think it's because I switched from my desktop to my laptop. I always tend to lose something when I do that, and then I got to reset a few things. But anyways, inflation expectations are up. Or said another way, the break-even rates between the tips and the nominal suggests that the break-even rate is higher. OAS, nothing to see here, folks. I've been saying that for 3-4 years now. Nothing to see here. U.S. corporate bond issuance year-to-date up 3.2%, but the month of July is a significant drop from the month of July last year. And you can see them just coming straight down here. Investment grade last year was 131, this year 93. High yield was 20, high yield is higher at 33, and convertibles pretty much the same. So 157 billion issued last year versus 131 billion issued this year, but it's 1 month, it's one data point. I'd need to see 3 or 4 of those in a row to say, hey, listen, we've got something here. 30-year, 6.63, showing a 6 handle now, down 9 basis points week over week. That is good for housing. The lower this goes, the better it is for housing. So let's see how far this goes. It can only go so far unless the 10-year really comes along. You get a 10-year below 4%. A lot of mortgage REITs really start to look very good. Okay, on July 31st, I think I put this up before. This is a Perplexity output. I think I'm going to do one of these every week, something out of Perplexity. We have 2 this week because we have the gold issue to solve, that, and that was more of a mistake than anything else. July 31st, U.S. Court of Appeals heard arguments for and against the use of IEEPA for tariffs. They lost the first time. They got a stay while they appealed. They heard the arguments now. Now we're just waiting for a resolution. So here, this is curious. It will issue a decision in the coming weeks or months. I don't think about months. I think that there's a high probability we'll get something before the end of next week. 2 weeks after they hear it, that's plenty of time to write your decision. I think it was 11 judges that heard this. This is the important point here. The judges appeared skeptical of the Trump administration's argument that IEEPA gave the president such broad tariff powers. Plaintiffs argued that the law does not mention tariffs and that congressional authority over tariffs is exclusive. After about 90 minutes of arguments, the court did not immediately issue a decision and did not indicate a timeline for ruling. The tariffs in question, including the global 10% baseline and country-specific levies, remain in effect pending the ultimate outcome of the case due to a stay on a prior lower court injunction. It is, I think, almost for any reasonable person, difficult to see how some of these tariffs are for national security. Tariffs on 39% on Switzerland, chocolate and cheese for, if you have a particular country that is belligerent in a particular way, or you have a particular resource that is critical that you need, where there is a failure, or at least a market success where you want there to be a market failure, such as outsourcing, because it's more efficient and you want it insourced even though it's less efficient, you have to create the market failure, not solve it. That's where a tariff can step in. But once you hit over 100 countries with it, and you start settling personal scores with it, that goes beyond anything about national security. So I think a reasonable person could probably find 5, 6, 7 easy examples of how is this in the national security? How is that in the national security? How is any of that? It's you may say, well, we need certain critical resources. And Canada has always been an available friend to the U.S. in every conflict the U.S. has shown up. Canada said, okay, we're coming along. Here we are. For national security, you'd want to be friendlier, not less friendly, right? So I think it's going to be hard to justify these. My suspicion, with a high degree of probability, subjective albeit, is that this court rules that these tariffs are way beyond the powers of the president and they do actually belong to Congress. The question is, will the Supreme Court agree to hear an appeal? They don't have to. There'll be an appeal. No matter what the outcome is, one of the sides, not two, one of the sides are going to appeal to the Supreme Court. So if this court upholds the tariffs, the other side will appeal. If this court strikes down the tariffs, the administration will appeal. The question does come down to the Supreme Court, and the buzz is they most likely would not agree to hear it, which means it would end here, and this could all be over by Friday. It could all be over. The only lingering question is, will the Trump administration ignore the court? He has been shown himself willing to ignore the court before. Ignore the court and just say, too bad, we're not changing anything, and create a constitutional crisis? Or will they remove the tariffs and just start name-calling and say they're all Biden and Obama appointees, they're a disaster, they're, you know the routine, right? That's the show we have coming up. Regardless of the outcome, losing side expected to promptly ask the Supreme Court, given the case's constitutional and economic significance. Any final decision could trigger either a wave of duty refund claims or solidify presidential authority over tariffs. So this would set a precedent if it's ruled that, the president has this power, then all presidents will have this power going forward, which means Congress, you don't need Congress if you have this power, because anything and everything is a national emergency. That's why I seem to think it's more of an emergency if they don't strike this down, because that is just outright theft of a power from Congress. I'm just going to take the power. So we do have this to look forward to. Keep this in mind. All of this could go away in a week or in a matter of a couple of weeks. Okay, let's have a look at gold. On Friday, gold just spiked. There it is. There it is right there. And then by the end of the day, it come out. So where you started the day, you pretty much ended the day after a while ride, on the belief that gold was also subject to the 39% tariff from Switzerland. July 31st, the Customs and Border Protection Service issued a ruling stating that 1 kilogram and 100-ounce gold bars, sizes most commonly traded on U.S. futures market, would now be classified under a custom code that is subject to steep tariffs. And these started on Friday, August the 8th, and so it went crazy. And here is what Perplexity reported. The technical reason for the confusion, rather than being coded as 7108.12.10, it was coded as 7108.13.55. Oh, Switzerland, here's the code. Without looking at the category, apparently by mistake. It says here, or unexpected policy change, but it was probably just a mistake. The White House stated late Friday it intends to issue an executive order to clarify misinformation about the application of tariffs on gold bars. So if we're clarifying misinformation and it was classified as being tariff, that to me seems like it shouldn't be, that is the misinformation. So it as quickly as it went in, it came out. For those who are hoping that it is going to be tariffed, this would be another example of a stupid tariff, and you got to spell that with 2 O's because it is so stupid. It would be a stupid tariff. What is the issue with gold, right? So, being that final copper can enter the country, not intermediate goods, but the copper tariff disappeared there. I don't see why you would even want a tariff on gold. It just makes no sense. So I don't expect that to show up again. I think that was a mistake, and by Monday it'll all be over. Okay, let's have a look at S&P 500, and you can see here I continue to be puzzled with the willingness of the market to ignore pretty much any bad news about anything anywhere. Forward 4-quarter operating earnings 282.57, closing SPX 63.89, increased by more than the forward operating earnings have increased. So from 22.18 last week to 22.62, bouncing up on 23. Who's looking for a breakout above 23? Implied volatility gone. Nothing to see here. Last 13 weeks, zero. Meaning that all the observations of implied volatility over the last 13 weeks was higher than it was on Friday where we closed. The lowest volatility in the last 13 weeks. Fourth percentile over the last 26 weeks, still sitting at the 16th percentile over the last 52 weeks. All-time high 638.95 still holds on July. Finished at 637.18, but after hours climbed to 638.60, sitting just below 638.95. What did set an all-time high is the NASDAQ, because Tim Cook figured out what you got to do with Trump. Give him a big, bold announcement. Give him a gift. He likes gold. Give him something shiny in gold. You know, he could have just jiggled some, 24 carat plated keychains in front of him. Jiggle, jiggle, jiggle. But he gave him a little thing to put a little thing on. Anyways, up they went, right, to try. Because, what choice did he have? Half the U.S. iPhones come from India, right? You got to get an exemption for that. And what do you do to get an exemption? You can't just ask for an exemption. You got to let Trump know he's the best, he's the greatest. You got to give him the cameras in the White Office. You got to give a big announcement that you're bending to his will. You got to give him a gift, and all of it is meaningless. I'll bet you that base wasn't solid gold. I bet you it's just gold plated, and that's probably 14 karat gold. Trump doesn't know the difference. QQQ hit an all-time high August 8th. Small caps refusing to come along again. I think once you get into September and once the rate cutting cycle firmly begins, I think they'll start to get a better bid. Not too many companies reporting next week. You've got LSCG saying 6, SectorSpider.com saying 7, blah, blah, blah. Thursday seems to be the interesting day. You have both Deere and Cisco reporting. IRS head gone. I guess every couple of weeks you fire one of these, right? Billy Long, this is the 6th one this year. This is the 8th month of 2025. This is the 6th head of the IRS. Besant is in charge now. So I am sure the absence of any tax returns from the Trump family will be ignored, right? What's going to happen to Billy Long? How about Ambassador of Iceland? Ambassador of Iceland. Yeah, let's ship him off to Iceland. That's where he'll be for the next couple of years. We won't punish him, but let's just make him the ambassador of Iceland. I mean, there are worse countries, I'm sure, but hope you got a coat, Billy, because it gets cold up there. But that's where he's headed. I heard an interesting statistic last week. 20 companies in the S&P 500 make up 50%. That would mean 483 companies make up the other 50%, because there's 502, 503 in the S&P 500. And 7 of these 27 make up something like 35%, 30 to 35% of that weighting. Super concentration, and concentration in big tech names in there. So where could the index go with all of this AI hype that's going on? Probably higher, because it is a weighting of all of the companies in the S&P 500. It is market cap weighted. Well, when 20 companies are 50% of the index will go in the direction of those 20 companies. That is an incredible level of concentration. And the valuations, well, they are stretched, and the level of volatility is almost non-existent. All-time highs, stretched valuations, all sorts of reasons to be concerned about risk, but risk is not there. So I think we need to update the body of knowledge of technical analysis for 2025. There's a whole bunch of indicators and a whole bunch of lines on charts that you can draw, and I think I can simplify the whole field to 2 things. If you're drawing lines, there's really only one these days, and it's upward sloping and to the right. And if you're drawing patterns, the only pattern that matters now is the V. And that's it. There you go. I will give you your chartered market technician letters, your CMT, and I've just saved you 2 years of studying and a couple of exams. There is only one line, there is only one pattern. Until this breaks. When was the last time we had something like this? You got a whole bunch of things going on at the same time, right? You got a high level of concentration, along with what does appear to be an AI hype cycle going on. Call it a bubble in some stocks. I'm sure out there's a bubble in some stocks, with no perception of risk, or at least no willingness to price risk into the insurance policies, which are puts. So I'm not, if you're not nervous, I think you're not paying attention. If you are nervous, that's the right thing, but you kind of have to play along. But it's better to play along, with your finger on the escape button the whole time than it is to just blindly go along and say, stonks only go up. Okay, let's take a look at Google. I had gone through its earnings a couple of weeks ago, and during this past week, it got a couple of upgrades. Its 1 year high was 205.22. It had a closing price. We're sitting at 202.46, which is at a 13 and a 26-week high as of August 8th, sitting 1.34% below a 52-week high, and not just a 52-week high. This would make it an all-time high on Google, and even at 202.46, it's roughly at about 20 times forward earnings. The index is pushing up to 23 times forward earnings, 22.6. So if 202 is roughly 20 and the market's at 22.6, you could see this between, if it just priced equal with the market, 225 to 230. So as I say here, to get a forward PE equal to that on SPY, that would put the target price 225 to 230. SPY already has that multiple. Google does not. So this is not like a one-year target. It's like saying, well, if it were going to trade at the same multiple as the market itself, it would be 225 to 230. And a bunch of analysts do agree. July 24th, Oppenheimer, new target price 235. JP Morgan, it was in August. I think it was just this past week. I forget what date. New target price 232. Jeffries, this was late July. Target price 230, all within there. And again, 225 to 230 is a forward price on Google equaling SPY. I am long Google by being short puts. I sold the 205 put, and I sold, I don't have it in front of me now. I sold other puts as well. So I am long on this one. These are the September puts, so there is time. So I did the 205s because that was its 52-week high, and I felt it could at least revisit its 52-week high. Now we do have some time before we have earnings again. So in between earnings, you can tell whatever story you want until the fundamentals show up again. One thing I've started noticing in the Gemini results is Gemini is now giving you YouTube videos as part of your results. So if you ask it about a particular topic, it'll give you an answer and say, here's a video that talks about what you're asking about, directing you to watch a video which is front-end loaded with ads. That's an interesting way to get ads into your AI search results from Gemini if you're not using Google search. And that is the problem. As I outlined before, 96 billion in the quarter, 54 billion of that came from search. YouTube is still only a little under 10 billion, 9 point something billion. That's a long way to go. How do you protect that? You've got to figure it out. Google has probably one of the best concentrations of smart people for any company that's out there. If there is a solution to figure it out, they'll figure it out. But I can't get past the fact that I don't Google anything anymore. I perplexity it. Is that a noun? Just perplexity it. It doesn't roll off the tongue as nice as just Google it. So maybe people will stick with Google because they don't want to start saying, oh, just perplexity it. They don't want to change their language, so I'm not going to change my habit so I can keep saying I'm Googling it. Or maybe Google is just now such a generic term that even if you're using perplexity, you're saying, I'm not searching, I'm Googling. I don't know. It is theirs to lose. Search is theirs to lose. Right now, they still have all the eyeballs. But they need to move fast, and I'm not seeing anything there. But maybe until next earnings, they can keep it up for a while until they report again and we see where search happens to be. As far as the price goes, we'll talk about ChatGPT here at the same time. As far as price goes, these things are massively underpriced. Everyone's losing money with these models. And really, you're not going to need 15 models. And the market, because of the cost of these things, the market is simply not big enough for 15 models. There's going to be a shakeout somewhere along the way. And if I had to bet now, based on the ones that I use, it'll probably be Gemini and ChatGPT. More than likely, that will be your two big models that are out there. And I think the rest will probably share 20% of the market. OpenAI and Google will probably be somewhere around 80%. Two big ones with a bunch of small ones. These things are massively underpriced. So this is what I think is going to happen in this AI space, and almost what has to happen in this space is what you're paying $25 or $30 a month for is going to be ad supported and limited. That your use of the reasoning models or the higher end models, you might get 3 or 4 queries a day. A lot more at the LLM that has a cutoff date. Because these things do require a whole bunch of energy, and even at that it will be ad supported, or you can move to maybe a $99 a month option that has no ads, much like you can pay a YouTube subscription and get no ads. I think for the power users who are paying $26 a month like me, our time is limited. It will not be long before we are either forced to pay the higher price or shut down. And based on our usage and based on the types of questions we're asking, based on the output, they can all see this. They will figure out very quickly who's using this for business and who's using this for personal use. And I think you can see the business plans really start to increase. It wouldn't surprise me to see some plans priced at $500 to $1,000 a month, and some even as much as $2,000 to $4,000 a month. Because you have to think of the value that you're getting. So take me, for example. My output is at least 500% higher because the AI tools get rid of a whole bunch of the administrative stuff I got to do when I develop something. Once I do my research and I have my bullet points and I know what I'm going to say and I know what the content is going to be, the rest is administrative. Now I got to write paragraphs and sentences. I got to put them in order. I got to do all of that. AI does that wonderfully and sometimes can write even better than I can. So if I give it a bunch of bullet points, I get my output. And especially when I'm writing multiple choice questions, if I give it the premise, here's the question set up, this and this. And here are the 3 options, or maybe I only have 2 options. I'll ask it to come up with a third, and here's the answer. And I ask it to take it from there. It does a good job, and sometimes better than I could have done it. Other times, okay, you got me most of the way there. About 80% of the way there. The other 20% is really where the expertise lies. Well, what would I have to pay for that? To have my output increased at 500% for more of me. So even if I get experts at the low end of the expert scale, I'll still be $125 to $150 a year on that cost. So I'm anywhere between $400,000 and $500,000 a year that I would be paying in wages to get this level of output. So how much would I be willing to pay? If my total cost for AI went to $3,000 a month, would I pay that? That would be $36,000 a year. Yeah, because what's my alternative? Going back to Google and clicking on all the URLs, trying to find the data I need. I'm not going back to that. I can't imagine having to go back to taking 3 to 4 weeks to produce one reading now that I can do it in 4 to 5 days. So I would pay for it, and it won't be long before the LLMs figure that out, before the Googles and the OpenAI say, look, we have to start charging for it. The business case has to show up, otherwise this is just a cash burn. So I do expect that you're going to start to see more limits coming in. Claude is probably the most limited. I can use that maybe for half an hour or 45 minutes, and then I'm said, okay, you've reached your limit. It'll reset at 9 p.m. tonight. Gemini, I've never hit a limit. And sometimes I've used this for almost 8 hours straight in a day, never hit a limit. OpenAI, I've never hit a limit on. And I have tried ChatGPT 5. And there is mixed reviews out there, and quite a few of them saying, it's really not that much. For the average user who's using OpenAI as their Google, no, it isn't. If you're saying, tell me about this, tell me about that, not really. You're not going to see much of a difference. In fact, you probably might say, oh, I like the older one better. Some people are saying that the older one, that they want their 4.5 back. However, if you're using it in a business case, you have to understand what increments mean. So I put down here 60 to 65 is not equal to 80 to 85. If you have an employee who's operating at about a 60% capacity, in other words, 60% of their output is good, getting them to 65 isn't very difficult to do. But if you have an employee who's at 80%, getting to 85 is very difficult to do. Think of yourself as a student. Going from a 60 on an exam, if you had to rewrite it to get to 65, maybe it's a couple hours of studying. But if you already scored 80 and you want to score 85, it's more than a couple hours studying. It might be 3 times the amount of time. Then getting from 85 to 90 is even harder to do. But it's those increments that end up meaning a lot for mission critical type of applications. So as far as what ChatGPT 5 can do, when I put in the same prompts versus 4.5, I get much more robust output. Now, if I were just using it as a search tool, I probably wouldn't know any different. But because I'm using it for very particular things, I tested it out. I thought, okay, that's a little bit better, but a little bit better. If I can go from 80% right to 85% right, it doesn't have to be 100%, but 85% right, that cuts down a whole bunch of reworking that I have to do, because right now I'm doing all of the 20% of corrections. Well, if I only have to do 15% of corrections, you've reduced the amount of time by another 25% for me. So in business applications and mission critical, each of these percents at this level really make a difference. Each of these little incremental percents. And I think that's where we are, is that these things showed massive improvement for a while, but now we're leveling out. That each increment is the same as the one before. So moving from here to here, you got a big jump in performance. But moving from here to here, the same distance, you'll get a small jump in performance. But looking at the same cost to develop that model, it's not getting cheaper to develop the model, probably the same price, but then to operate it with all those extra parameters, the cost of the output is going to be much more. Maybe LLMs will be priced that way, is what part of the curve do you want to be on? We can put you on this part of the curve and that might be $30 a month. But if you want to be on this part of the curve, that might be $300 a month. If you want it to be running with 2 trillion parameters, it's $300 a month. But we have a model with 1.2 trillion parameters, that's $50 a month. Or we have one with 600 billion parameters, that's $30 a month. Ad supported. It could be priced that way. What I'm getting to here is over the next 12 months, don't look for really big increases in performance. I think we've seen the really big increases in performance. I think we're going to get a lot of incremental improvements here and there. The radical change in AI is going to be in pricing and in usage limits. It has to be, the business case has to come along. I don't think they're going to make the same mistake as the dot-coms did, saying, let's just get the eyeballs and worry about the money later. I think the concern for the money is probably right here, right now. OpenAI is probably looking at this saying, look, we think this is it. If this is their 5, they must all be aware that every gain here is percents. Let's get 1% better. You know, it's 80%, let's make it 81, let's make it 82. And each of those gains are going to be just as expensive to get as the last gains. You know, the next 2% is just as expensive as the last 5%. But the innovation now is going to come in how they price this. I would migrate to the top of that curve. I would migrate to the higher end prices, because I can measure the cost of the solution. Most people can't. So they're going to be 25, 30. Well, the market is not big enough to pay for all of this with 10 models. That's the problem. That is the impending problem coming. Either costs go way up for users, or many of these models disappear. My bet is many of these models disappear, and you're going to have differentiated pricing based on how much you use this. As for now, I'm going to stay long Google. I do have it with puts. I don't plan on closing these puts. I think it'll finish well above the 205 before the September closing, maybe over 205 by the end of next week. I think a right target zone for it is around 225 to 230. This is all I have for this week because I had to fly here. Then I had a bunch of things to do Friday. I had some guests already show up Saturday. We got 2 more guests showing up today. We have 3 for the week. I think for September we have 2 spots available. So if somebody still wants to make the journey down to Costa Rica, I think we have two spots available. And in August, the last week of August, I think we have 1 spot. Yeah, I think we have 3 left, and that's about it. But we'll leave it here, and next week hopefully some exciting stuff happens next week. But this week was it wasn't really that exciting. Not much to talk about. I gave you all I got. I'll see you next week.